Okay, so hi everyone. My name is Shotaro Tani. I'm an Indonesia correspondent for Nikkei Asia, and I'm here with three distinguished speakers to talk about VC fundraising trends in the region. Let's start off, if you can three briefly introduce yourselves and introduce your funds, and if you're doing any fundraising, just quickly talk about that as well. Starting with you, Roderick.
Sure. Thanks, Shotaro. Hey everyone, my name is Roderick. I manage two funds in the region. One is SMDV, which is sort of a family office affiliate of the Sinormas Group here in Indonesia, and the other one is called EV Growth. EV Growth is a joint effort between ourselves, East Ventures, and then Yahoo Japan. We had our debut fund we started in late 2017, and then we did our first close in 2018. Since then, I think our final close was closer to end of last year. Since then, we've deployed to 21 companies in the region, right? So yeah, it's been very exciting. We're coming up to the end of our first fund, so we're probably going to launch a second fund early next year. So we're gonna see how that goes, I guess. Thanks.
Thank you, Pandu.
Yeah, so hi everyone. My name is Pandu Sjahrir. I'm the managing partner of Indies as well as ACV Capital. Essentially, our business is multi-asset. We Indies itself has two line of businesses with respect to special situation, which includes technology and non-technology, where we specialize in venture debt, right? Because our background itself is in credit. And we have a JV with Varde to do special situations where our average check on average is about 50 to 75 million on a deal. The second business is Indies Pelago. Again, it's also special situation where we invest in secondaries that can be mixed with primary, where we target mainly companies that are already in Series C and above, where there's already proven business model and track record, so it's already in growth stage. And lastly is ACV, which is slightly different branding, but what we do is similar to Roderick, and we've done a lot of things with Rod as well, in seed all the way to Series B, right? So the way, if you look at it on a big picture, we would like to be involved from very early on, all the way to the stage where the company is ready to go public. Myself, we've been privileged to be involved in public listing, both for a local company, our family business, as well of another company that's now listed in the New York Stock Exchange. So we're quite unique that we've experienced taking companies or being involved in companies that have gone public. So we see the benefit of being public. Lastly, I also serve on the board of our stock exchange, Indonesian Stock Exchange, where we hope some of you that are listening or have companies that are operating in Indonesia will also consider looking at the stock exchange as an alternative for any liquidity event that you may have. So that's a little bit about us, our business. Thank you.
Thank you, Pandu. And last but not least, Dave.
Thanks, Shotaro. And hi, everyone. This is Dave from Altara Ventures. We are a early stage tech venture capital based out of here in Southeast Asia. And we focus on, typically companies in around Series A. We look a little bit at pre-A, we look a little bit at Series B as well. But the broad focus is to back entrepreneurs in this region, Southeast Asia, and also look into what might be exciting for is cross-border, whether it's cross-border with US, India, or China. The team here, besides myself, my partners, we all come from, we have all been at some point either founders of company or early employees of tech companies. that subsequently went public, and through that, we would love to bring some of this experiences and then share with founders in this region. Three of my partners, Bun Hui, Chao Bun, and Kiat Wang, in the early days during the 90s and early 2000s, they together co-founded and built a hardware technology company in the electronics manufacturing space, and build it to public, and eventually exited to Celestica. So they are in the space similar to Foxconn and Flextronics, for folks who have heard those companies and understand the space. And Gavin, the other partner, he was early employee at Zynga, and stayed through that when they went public, prior to becoming an investor and focusing on investing both in the US ecosystem and now Southeast Asia. And I myself, I spent a lot of time in enterprise software and enterprise technology. So at some point I was a part of Sjahrir prior to them, in the early days when they have less than 50 employees, and really saw through the pains and challenges in scaling businesses, and spent several years there and left right before they got listed in NYSE. So we are very excited. All five of us, we are native Southeast Asian, and we are very excited to continue to invest our time and for the many years to come in this region.
Got it. Thanks for that. And before we start, just a note to the listeners, I'll try to take some questions towards the end of the panel. So please start sending in the questions now. If you have any, there should be a Q&A box that you can type your questions into. So to start off with, obviously the pandemic has been a challenging time for everyone, not just the startups. We've had some high-profile startup busts as well, but it's obviously a hard time for VCs as well. So an open question for three of you: what has been the challenges in really raising the capital for your funds? Not just the pandemic, but obviously if there are any other challenges as well. So for example, the lack of understanding of Southeast Asia among the international investors is a story I get told quite often. If there's changing appetite among the LPs, and any challenges that comes to your mind.
Yeah, okay, I guess I can start first.
Please.
I think the closer you are to Southeast Asia, if you're based in Southeast Asia, I think the effect is probably moderate. But if you are, at least for me, my experience, and maybe some of you are different, but if you're in the same time zone, maybe still there's not as much negative effect, so it's probably moderate. But if you are global and if you are based in the US, I would say most of the US investors are looking at US itself. I mean, if you look at the public market in the US, especially in tech, risk adjusted, a lot of them are overweight on the public equity side with respect to tech. On privates, if you look at it too, a lot of it is becoming overweight on US, right? So if you think about Asia, China is slightly underweight overall. So they will probably add more into the China position, both public and private, right? But Southeast Asia is being compared to India, right? That's where it is. And India probably will go first, at least in the eyes of American, European investor. And then obviously looking at Southeast Asia as another set of asset class. So at least for us, our fundraising, we look at Southeast Asia, North Asia as the main focus, right? So the nexus of North Southeast Asia relationship, and also because there's also deep familiarity and successes for North Asian investors into Southeast Asia. With US, we're still doing quite a bit of educational work, right? But I think you just have to understand that even for North America, at least today, after March to I think until last week, they are still looking at US developed markets quite positively and looking at growth happening on a big picture on China, then followed by India and Southeast Asia, right? But with Southeast Asia too, they also now understand that Indonesia is the biggest market. So I think they already come with that viewpoint, and now our job as investors is to help educate the growth and the potential, and also the risk associated with it, and how do you change or the mindset of thinking of reallocating capital, right? So I guess that's just big picture, at least from our conversations with some of the large investors that are out there.
I got it. I mean, Dave, Pandu obviously mentioned about China right now, but obviously you have the US-China trade tension, trade and tech confrontation going on, and we don't know how that's going to pan out with the Biden administration. But do you think this overall picture of US-China rivalry can benefit Southeast Asia, and especially Southeast Asian VCs when they're trying to attract capital?
Well, obviously everybody's watching what is happening between, or what's been going on between US and China, right? And just given that they are the two largest economies in the world, and I think a lot of attention is going to continue to pay to those two countries, But there are really several considerations when when it comes to speaking with or looking at investing into Southeast Asia as a region as a whole, right? And if I were to take on a macro lens for a moment and looking in how dynamics has been shaping out, I think there's a lot of interesting pointers and trends that would be exciting for Southeast Asia as a whole, right? And one is, historically, Southeast Asia has always been a international exchange, right? A trading place. And and this is our history. We look back to 500 years ago, right? Malacca, right? The city of Malacca was a trading entrepôt, right? And then that kind of dynamics continue to expand across the region, right? You have various European countries coming over to this region in the early of the a couple centuries ago, and likewise for Singapore, right? That's how the whole country and city developed. And but the good thing now is we're talking about modern days trade dynamics and tech innovation competition, right? The good thing is it is no longer guns and and spices, right? No longer that kind of a scenario. So the good thing is that there'll be probably no real actual physical casualty, but I think Southeast Asia, as being a strategic location between the east and west, increasingly will see traffic and attention, just given that for people who are on the business side of things and want to continue their conversation activity, many of them will be looking for a neutral and international exchange location, right? And Southeast Asia has, throughout history, played that role very strongly, connecting the East and the West. And I think both, we're going to see, and then we're already seeing, right? Chinese tech companies, coming into this region, setting up more presence, investing more in this region, and likewise, right? For America, for the U.S., there's a recent conversation about the U.S. Navy potentially, setting up a fleet, right, to have more coverage in the Pacific, and I think this all will, the ripple effect will go into the business realms and the tech realms. So if I'm an entrepreneur building for the next 10 years, this is actually an exciting time, especially in Southeast Asia, just given that increasingly there is all these dynamics going on, and there's all these opportunities that we're talking about.
Right. So and Roderick, you said you obviously have the SMDV, the Sinarmas investment arm, and then you have the East Ventures, the fund with East Ventures. And you said the fund with East Ventures, you're probably going to start fundraising for the second fund soon. So just to start with, what kind of challenges do you see ahead for the fund when you're trying to raise capital?
Yeah, no, I think well, so far I think both Pandu and Dave talked about China and US a little bit. So far our LP base has been more Southeast Asia and Japan. So I think we're going to figure out as we go up there, I guess, right? I mean, like I think for North America and maybe other parts of the world as LPs, there needs to be a lot of education probably, right, for this asset class here. I think that we're quite lucky that we are in the venture capital technology sector, right? That even with the pandemic and to some extent, I think there's acceleration for digital and whatnot, so the interest remains high. Probably for us though, what we see as a challenge is existing LPs should be okay, right? I think we've had relationship, we've met them firsthand and whatnot. New relationships might be a little bit difficult or take longer. We would think, right? With the travel restrictions, we won't be able to meet in person, right? And then for them to really get to know us or maybe even due diligence, I think will take some time, right? So we do foresee potentially that we will take a little bit longer, right? Having said that though, right? So far from initial discussions and our understanding of talking to people, the appetite is definitely still there for LPs to invest in this asset class in this part of the world.
So are you definitely going to have US, maybe even European LPs in this fund, apart from the Japanese and local?
Yeah, no, I mean, we're open. I think we're open. I think we're evaluating, right? I think, you know, if you want to go to the US, I think you better make a full effort, I guess, right? You know, and in the past, right? I mean, you could do road shows and whatnot. You could fly there for a week and then meet like, you know, multiple potential LPs, right? I think it's much harder to do at the moment, right? So, but we are definitely open. I think we're in the process of looking at, you know, what makes sense, I guess. Yeah.
Got it. And the SMDV side, so SMDV Sinarmas is obviously one of the biggest conglomerates in Indonesia, and they often act as LPs to different funds as well.
Right,
so what does, in this current environment, what does a big family like Sinarmas think of the current situation with regards to investing in startups and venture capitals?
Yeah, no, I think it's a balance, right? I mean, in some sense, right? Given the current environment, right? Definitely, there's a flight to make sure that the core businesses are sound and secure, right? So attention definitely goes a lot to the core businesses. On the other end of the spectrum, though, however, right? Given that digital is accelerating in the region, in the businesses and whatnot, there's also emphasis to look at more digital as well. Now, there are different ways to do it, right? I think, you know, as with the big groups, you can either invest in funds or other funds, right? And then try to get access and knowledge to there. You can do things yourself, right, as well. So I think it depends on the group themselves, right? I think different groups, different conglomerates have different appetite and different preferences. But it is a balancing act, right? I think for sure they have to first look at their core businesses and make sure that's safe. Right, and then how digital, if anything, can accelerate some of their businesses is the second part.
So am I right in thinking they're still trying to figure out the balance between focusing on their core businesses and investing in digital?
Absolutely, I think everybody is, right? I think so. So digital is digital, right? I think it's affecting our life and it's moving very fast, but you know, like with any other groups, whether it's family-owned or professionally owned MNCs and whatnot, everybody's sort of figuring that out, right? And because the parameters keep changing, right? I think it's moving quite a bit, right? You know, you have you know, Pandu is with C Group, right? Which is now, you know, the largest, probably the largest publicly traded company in Southeast Asia, if not at least top three, right? So that dynamic, right? And then, you know, and while like in China, you have companies like Alibaba and Tencent being separate, right? C is playing both, right? They have the largest gaming, they have the largest e-commerce regionally, right? So that dynamic as well, and how you know how different stakeholders, whether it's government, family-owned businesses, and MNCs work with companies like C would be quite interesting as well. And that changed quite a bit, right? Of course, they've grown phenomenally, right, in the past year or so, but the stock price have grown a lot more than the business have grown. That presents a very interesting dynamic, I would think.
Got it. And Dave, Altara was launched only 2 months ago, right? Why? My perception is that this region is actually quite awash with dry powder, and there's obviously quite a lot of local VCs and other investment vehicles as well. What is the challenge of being a new venture capital in this region, and has that affected your status when you're talking to investors and asking them to invest in your fund?
Thanks, Shotaro. you know, when we talk about, you know, the amount of capital available to deploy across each of the region is always a relative perception, right? I mean, it's always a supply and demand in the sense that, you know, in the same time, there's also all this, you know, new activities or ongoing startup activities that's going on in the region. And of course, you know, I think it's very important to also understand where does, you know, the capital split or being focused on, right? You have all these various stages and maturity of companies. And not all capital being raised are essentially being deployed in a particular stage. They're essentially being allocated across, you know, from the very early and all the way to even the very late stage, right? You know, from our experience so far, you know, as you know, some of my fellow colleagues here mentioned, some of the, I would say some of the potential LPs or LPs who traditionally look more into Asia as a broader pool, and that means traditionally, you know, more on East Asia or North Asia, right? We're talking about, you know, China and in the South Asia region, which is mainly India. Increasingly, you know, Southeast Asia as a region is, you know, is coming onto the radar, right? They are increasingly, you know, getting more information about it, getting more educated about it, right? And the historical context behind it. And of course, there's always, you know, several factors that an LP will look into, you know, when looking into potential investment in this region, right? You know, especially when looking at some of the managers, you know, do you have an emerging manager program, you know, or, you know, you typically only look at, you know, some of the existing managers, right? So all these factors come to play. And I think, you know, in our journey so far, you know, we have been fortunate. We've been, you know, engaged and speaking with several LPs out there, and you know, as we continue to engage with the market, you know, our sense is there continues to be a lot more to be done, right, for the ecosystem itself, meaning that, you know, at every side of the market, there is a lot of opportunities to build and solve, you know, significant and large opportunities for the market. And then, you know, on the deployment of capital side of things, you know, I think there's still a lot of room, a lot of opportunity to really pick, you know, your focus area and the stage, the space, the you know, the business model, the market that you want to focus on, right? You know, after all, when we look at Southeast Asia as a whole is actually, you know, similar to India in terms of market opportunity, right? So it is, and it is an early market, is an emerging market, you know, with all the traction that we have seen across some of the early segments. You know, let's take, for example, in the consumer or e-commerce space, or looking at, you know, fintech logistics. You know, these are some of the sectors that has been seeing growth over the last 5 years. And looking at the pace of growth, and you know, very often, you know, a lot of people will look at, you know, some of the reports that's been put out there. The growth year over year is just, you know, it's just mind blowing, right? In terms of the pace that, you know, people are going online, the pace that people are now going digital, right, and consuming digitally or through digital channels, right, whether it's online, offline as well. It just points to a lot of, you know, interesting indicators, and for things to come for this region.
Right, got it. There's lots of opportunities. Pandu, speaking of opportunities, obviously Indies Capital doesn't do the bog standard venture capital, whereas you invest in a company, take their equity, stay on the cap table. You guys do structured financing, you guys do debts as well. So I was just wondering whether investors are showing more appetite towards those alternative ways of investing.
At the end of the day, technology is an asset class. And as any asset class, there are always a variety of ways to express return, right? So you can do it obviously straight equity. You can also do it as in a late stage. You can also do it through mezzanine. You can always do it through pre-IPO financing. At the end of the day, our ability, our knowledge is in the credit side, We know it very well. That's where we've been established the last 8 to 9 years. We've also been fortunate to invest in tech early on, right? So we also have some street cred with respect to equity with Roderick. So, you know, couple that, and if you look at in the US or even in China, I mean, the name of the game is also to be able to differentiate yourself with different products to your customers, which in this case is the LP, right? So if you have a good track record, you have a good team, and you have an ability to source deals, right? And obviously, you know, better is deals that are direct with the founders, right? That's the way you differentiate yourself. And probably one unique thing with us is that we're quite well established to be able to do large deals in the venture debt side, right? So just recently, you know, I think deals that were Deal Street mentioned, right? A couple, one in Thailand, another one in a logistic company in Indonesia that we just recently did. I mean, essentially, a deal is almost the size of a typical venture debt fund in Southeast Asia today, right? So the unique thing is, as companies get bigger, is how do you able to put a good deal on the table at a fast pace? Because I think for us, being able to do a deal maybe take about 6 weeks, right? And you're doing on average 50 to 75 million per deal ticket. Well, usually a typical equity deal can take slightly longer, right? Because of the rights, etc. So we trade some of those quote unquote equity rights for protection, floor protection, as well as some type of fixed return. And the rest will come if we're calling the equity correctly, right? So that's kind of the trade-off for us. So, I mean, you just have to have a slight differentiating point and a good offering to your customer, right? I mean, that's the way we look at it. And at the end of the day, we're hopefully can be one of the places, institution that we can offer from very early stage, taking significant equity risk, all the way to the very end of taking a good credit risk, right? But essentially in technology as an asset class.
Well, obviously, currently, the equity, investing in equity is the biggest source of investment for startups. But do you think credit investment into startup will be as big as equity as well?
At the end of the day, if you look at it, we're still talking private markets, right? At the end of the day, if you look at technology, you gotta differentiate. There's public and private markets. When you talk of public and private, there's always credit and there's equity, right? Today it's only private and then equity. And when you look at private and equity, you're still talking about VC. So it's still very small on the overall landscape of technology as an asset class. So our job is to be able, okay, can we have positions when you look at that 4 quadrants in each one of them, right? We're still very early. So we're still following the engagement because technology, don't forget, is still less than what, 100 months? If you look at number of months, it's only 7 years, right? So we're still in very early stage, right? But as this progresses, right, the next 5 years, you're gonna see more public equity. Once you see things on the public equity side, you're gonna see public debt, right? And you gotta have an ability to work across capital structure. And that's important. Today, to be honest, the knowledge is still in VC, right? But not yet in the growth stage and definitely not in the private credit stage. And that will be developed over time. So our idea is to be able to teach, and not just teach, because this is already done in China, this is done in the US, Southeast Asia is just next, right? So our job is to be able to fill some of those needs from the investors.
Got it. And what are the things, again, an open question, 3 of you, what are the things that's obviously happening in the public investment space is more consideration towards ESG, so environmental, social stuff, investments, and investors are increasingly conscious of ESG. Is the same happening in the VC world? And is it the case that, you know, venture capitals which are investing in, say, like environmentally conscious startups are getting more funds?
I would say at the end, and I'll give it to Roderick, just quick 30 seconds. At the end of the day, ESG is first and foremost. It's one of the few things that we always have to be a top of minds. And I think obviously investing, if it's same between 2 companies, but one is operating, because first you got to talk about the quality of founders and the quality of the business, right? And then obviously if they solve a particular issues with respect to environment and the social side, yeah, you definitely would reallocate capital there. I mean, I know Roderick and I invested recently in business called Aruna, which is doing e-fisheries, and that's done fantastically well. that solves real acute problems, right? That solve all those 3 points. I'll leave it to Rodla. He knows this stuff really well.
Roderick?
Just very quickly, I think no, absolutely, it's gaining a lot of interest, especially, right? I mean, like ESG and ESG compliant companies, right? Is it a priority top of mind? I think it's probably going to take some time before it's really embedded, I think, right, in the companies. I think you know, in general, though, a lot of the portfolio are in some ways already following that, even though they don't specifically adhere to it, right, or the what's known as more common standard. For funds as well, we're starting to see in some of the companies, our co-investors are some that are more ESG, either ESG compliant or ESG focused funds, are asking, they have their own checklists and whatnot, right? Yeah, so you're gonna see that more and more. I don't think today, at least specifically, that investors are, other than a few investors that are specifically saying that they're ESG investors, right, are really it's their main priority. But you will see more of that, right? For us ourselves, right, I think we're looking at, you know, even for our fund, right, I think there's different steps to it. First step is, you know, just being aware of it, and then, you know, becoming ESG compliant, right, and then you know, really being, you know, really targeting that area, right? But we have to be careful as well, because I think our style of investment thesis, we're minority investors, right? So there's only so much you can push down to the companies. So that awareness will share, of course, with the founders, with the management, with the team, but eventually it has to come from the companies themselves.
Right, got it. Yeah, Dave, how much of ESG was a consideration for Altara when it set up its first, when it was setting up its first fund?
You know, Shotaro, there's actually, you know, I'll say quite a good amount of emphasis, right, to think through the entire ESG framework and essentially guidelines and recommendation, right? That was, you know, that was set by the UN, right? And you know, if you were to look at the entire conversation around ESG, I think that is more, as you know, especially with the large institution LPs, right? It's definitely top of the mind, you know, in terms of how managers are thinking about this space. And when we look into how things have evolved, right? If you look at in the earlier days, there is always this category that we call, you know, impact investing, right? This you know, socially responsible funds that impact, that where impact has a lot of emphasis in how they evaluate investments and the criteria, the sectors that and even the business models that they will want to go into, and it started off really more from a more niche perspective, right, where a lot of this conversation around ESG now was very early on a table stake at impact among the impact investors, right? So you know, these are guys, for example, you know, like I would say like investor like Leapfrog, for example, right, that for the longest period of time, you know, has been thinking through a lot on this topic. Now, just given that, you know, in terms of the recent development, of course, the concept of ESG, the entire framework has, you know, starting to become more mainstream, right? We see it across, you know, not just in the private investor sectors, even across, you know, some of the public side of things. You know, a lot of firms are now thinking through and, you know, putting more thoughts onto ESG. You know, how does that then translate to asset selection? How does that translate to some of the operating framework that you're going to have, and how does it translate to portfolio companies? I would say, you know, venture class as itself, you know, traditionally, you know, there has always been, I would say, many funds, right? Not all, but I would say typically many funds already have, you know, what we call excluded sectors, right? So this would be, you know, sectors or areas that many funds would typically not invest. And very common is, you know, things like, you know, things that are going to do with gambling, or things that are going to do with that might be detrimental to health and things like that. I think traditionally a lot of venture funds would have excluded those kind of businesses from their mandate. But now, you know, with ESG coming up, you know, in terms of prominence, I think it will just set in pace, you know, for more managers to be aware. And of course, there's many levels of that, right? As Roderick alluded to earlier on, some of, if it's the very first time this concept is totally new to a particular fund, then it would be more of a, building awareness, building, understanding and appreciation of that. And then over time, right, for the more mature ones, you might have some sort of a framework that guides your investment thesis and principle, and also guides, provide that same level of, guidance down to portfolios. And then, for the very far end, right, where you have the impact investors, who has been living and breathing that concept for a long time now, right, that really weaves all the way into, the double, what we call the double bottom line return, or even triple bottom line, depending on how they want to define that, right? So.
Got it. So we have 5 minutes remaining, and I have one question from a listener, from Henry Pratama. How do panelists see the risks and upsides of fundraising for a fund to establish a fund locally onshore in Indonesia versus an offshore fund? Can anyone take that?
Pandu, maybe.
Just quickly at the end, I mean, just like for Indonesia, right now, very short term, 6 months, obviously a foreign appetite for Indonesia is significant with respect to VC, okay? Full stop. But at the end, medium term, I think for Indonesia, they need to develop their own, I would say, local ecosystem with local currency to develop the VC, right? If you look at China, if you look at US, you look at large countries, the largest VCs are funded locally, full stop, right? And for us as a country, we also need to have the local pension, local fund managers to invest in own GPs, local GPs, to build the ecosystem meaningfully. Indonesian pension funds and GPs are actually severely underweight tech, right? I'll just give you a comparison. This is easy, right? If you put in all the technology companies today, listed and unlisted, right, that have significant operation in Indonesia, their combined market cap is larger than all the listed telco companies in Indonesia. Telkom, Indosat, Tara Bersama, all of it combined, and the technology businesses now is bigger within less than 84 months. But all the local fund managers have not benefited from that. They have significantly been underweight technology. Imagine if they increase it, it's only upside, right? So it's a double, I mean, very, very short term. For those that are asking, I know it's more maybe about fundraising. Yes, it's easy to get the foreign money because they've had some successes, right? Good successes as investing in Indonesia. But medium term, for this to be sustainable, the local fund managers, the local pension have to be investing in tech. Okay.
To that extent, maybe Roderick, how excited are you guys of the setting up of Indonesia's sovereign wealth fund? Well, we don't know the details yet, but in terms of really building up the ecosystem, do you think that's going to play a pivotal role?
Absolutely, right. I think for a country the size of Indonesia, right, comparatively to our neighbors in Southeast Asia, we haven't had a sovereign wealth fund, right? And look, having one, I think I mean, not necessarily for technology per se, right? I mean, technology is probably going to be one of the areas, right? For infrastructure, healthcare, agri, whatever else as well, right? I don't know much about the details of the sovereign wealth fund, right? I mean, like, who's going to be part of it, or and when it's going to be really established, right? But having that, I think would encourage, I think innovation, I think also growth, right, for the sector, right? And it will be very useful for the ecosystem, right? I mean, if you look at our ecosystem, right, I think we talk about fundraising from the LP side, right? And then it's still there's only it's getting quite interesting, but we only see LPs from the region and whatnot. Again, there's US, right? There's North America, there's Europe and whatnot that can come here, right? In terms of the funds themselves, right? I mean, you see you see similar players, I think, in the space, right? It's very collaborative at the moment, right? Although at some point, it's probably going to be some competition, right? Like with Pandu, we co-invest a lot, but I think Pandu now has ACP as well, right? Which every once in a while competes with these ventures, I guess, which makes it interesting, I guess, for us, right? But look, no, I think I just want to say, I think, look, and at the end of the day, right, I think we really believe in this space, right, in the sector and whatnot, right. And we have absolute confidence, right, that the sector is going to be is going to be very, very pivotal and very important in the next 3 to 5 years. Yeah, and as well as the sovereign wealth fund will play a part in that.
Got it. And with that, we're out of time. So thank you very much, you three, for your fascinating insights, and thank you everyone for tuning in. I'm sorry I couldn't ask all the questions, but thank you very much.
Thank you.
Thanks.
Guys, thank you for hosting us. Bye.
Bye.